baby, Alibaba right now is setting up to be the greatest value stock of 2022 and potentially my greatest swing trade of 2022 because I have had a gleam in my eye ever since the political rhetoric drove this Chinese conglomerate into the absolute toilet to the point where I've been building up margin accounts, a line of credit accounts that are purely dedicated to just buying Alibaba stock when I see the technicals start making sense and the turnaround happen. No, this is not financial advice. Don't take this as financial advice, but if it's something that interests you and you want to see further updates down the road, consider hitting that like button, subscribing for those updates. But we can all recognize that Alibaba at this point is probably the best value stock and not even recognized by me, but at the likes and the scale of people like Charlie Munger, Warren Buffett's partner in crime at that Berkshire Hathaway, one of the S&P top 10 companies. And basically they own a company called the Daily Journal. And basically Charlie Munger stated, they actually just released a statement that the Daily Journal held 602,000 American depository shares in Alibaba for the year end, up from the 302,000 shares as of September 30th. They literally doubled down on the company. And I think this was really entertaining because so many people had fear about these American depository shares not being real shares in the company. However, if they delist from the New York Stock Exchange at any time, you don't lose your shares. What happens is they just convert over to Hong Kong shares on the Hong Kong Exchange, which primarily just means you're going to get a call from your broker and they're going to say, hey, do you want to hold this in the Hong Kong shares or do you want cash for it? And I think Charlie Munger has a very calm and mitigated approach to this. And I think the guy knows what he's doing pretty correctly here. More balls than I have because I don't want to be throwing money into the current dumpster fire that is Alibaba stock. But just take a look at this, guys, because since this news came out today, the stock did shoot up about 2.4% into the close, pulling back a little bit into the after hours, but this isn't enough to drive the stock anywhere. I mean, take a look at this. We're still down 49.94%. The company trades for a PE of 16.9, actually cheapest amongst many of the big tech giants. I mean, Tencent is trading down, but it still trades for a higher value. I mean, JD.com still trades for a much higher value. Baba's just been kind of thrown into the fire, and I'm finding it to be most intriguing at the current level because it does look like we're hitting into a base here, but this isn't enough to make me leverage capital. And I'm going to tell you what I have to see before I'm willing to throw that kind of money into this stock. And first and foremost, guys, before I tell you that, just take a look at the revenue here. I mean, this company is expected to do 814 billion yen or yuan there in 2022. And just to give you an idea, we're roughly 130 billion USDs here, folks. But just take a look at the graph here. I mean, astronomical growth, even through this political rhetoric, the blocking of Ant Group's IPO, like so much stuff has been priced out of this company that, I mean, where's the bottom, right? Stocks can always go farther down, but my goodness, there's a lot of people out there buying into this company based off what Charlie Munger is doing right now. Compared to Amazon, that's doing 457 billion, guys. I mean, there's a drastic difference between these two companies, but when you talk about the valuations between the two, it's like night and day. Amazon trades for like 50 times or at least 10 times what the value of Alibaba is. And the price targets on this are even funnier because the average price target on Alibaba is $209 from analysts on the high range, $314 from the current price of 119 means, I mean, you could turn that $120 potentially into 300. So for every 100 invested, you're making an extra 200 on top of it. That could potentially happen, but God knows analysts have been wrong in the past. So let's just talk about, again here, guys, some of the more interesting stuff that I found because Alibaba fires up e-commerce war with Amazon for global delivery. This came out actually mid of last year, and I feel like it was largely overlooked in the political rhetoric, but let me just read this. Chinese e-commerce giant Alibaba is intensifying Amazon Inc. Rivalry by promising fast deliveries from China to anywhere in the world. Basically, what happened, Alibaba aims to deliver goods from China globally in 72 hours. With lower prices and faster delivery play a crucial role in winning the market share. Alibaba's e-commerce products are cheaper than Amazon due to its direct access to Chinese factories and merchants. And what's really funny is I would state, I wish I could figure out what these facts were. I think Amazon's products, maybe 10 or 20% of them are largely coming up from Alibaba in the first place because most people go on Alibaba, find cheap products, bring them into an Amazon warehouse, and then they sell them through Amazon at a much higher price. I wouldn't be surprised if a huge percentage of Amazon products come from Alibaba anyways, but both giants are trying to win the global e-commerce market, which is estimated to reach 104 or 1.4 trillion, 1.4 trillion by 2025, according to the Wall Street Journal noted, which right now I mean, we're not even close to that. I mean, again, you take a look at you take a look at Amazon doing 400 billion in sales, Alibaba doing about another 100 billion. I mean, you add in the other companies, maybe some JD.com in there, a few of the other smaller caps. I mean, we probably are just capping, maybe getting close to that, 700, 800 billion, $1 trillion range. I think it's going to be much bigger than this personally, but Alibaba's fast delivery is gaining prominence in European cities. It is working with Western delivery companies toward a different shipping network compared to Amazon. Alibaba has 800 robots in its largest Chinese warehouse. It is 2 times as efficient compared to a conventional warehouse. Robots do the heavy work, which speed up their activities. It helps process 75 billion worth of packages for the 11-day Chinese single-day sales, which was one of the best sales they had over the holidays there, guys. I mean, there's so much to be bullish on. It's like a diversified ETF, like buying Amazon. You're not just getting shipping, you're getting tech, you're getting robotics, you're going to get it self-driving, they're getting into the car industry. Like, there's so much. It would take a long time to fully understand Alibaba stock. But Charlie Munger thinks he's got his hands around that. And I don't have the balls he has to be buying into this dumpster fire that it's currently been. However, if we can find a bottom in this company, guys, and it starts to flat trend for the next quarter, I feel like so long as we're getting past the political rhetoric, that it isn't going to take much more than a few earnings period and a few more people coming out saying, hey, this company's way too cheap, I'm going to be buying into it. We know what's going on with the American depository shares now. A lot of those fears are getting mitigated. Who knows? Maybe China comes out of the whirlwind and does something else that drives the stock down. That's why I'm waiting. I don't want to put money in this right now. But when I see this thing start to break out, guys, and we start seeing it back in that $150 range and there's like a confirmed turnaround, I am going to be willing to load the absolute boat on this stock for a quick swing trade, because when this thing starts steaming up, so long as the Chinese rhetoric doesn't come back around and slap it into the ground, which we're going to mitigate with stop losses and things of that nature, and of course having capital to back up the line of credit in case we got to pay it down a little bit. But nonetheless, guys, I really want to see it come back to this line right here where we saw at the 150 range, and I just can't foresee this thing not doing kind of a moon shoot where we'd see it quickly run back up to the 250 range. Again, whether that happens in 2022 is still debatable, but I think it has real potential too, because again, that rhetoric is slowing down. The value investors out there are screaming and dying over this company. And maybe I'm wrong, because they have to be the ones selling it, right? Like, who's selling out of it if they're buying into it? But Charlie Munger, man, 600,000 shares. Do you have the balls to double down like he did? I'd love to hear about it in that comment section below. But in light of this, stay cool, stay awesome, and I look forward to catching you in the next one.